What if I told you that turning $100,000 into $1 million isn't a fantasy? Most people never get there because they don't understand the tipping points that accelerate wealth. Today, I'll show you exactly how to grow $100,000 into seven figures with real, practical steps you can start today. Your first $100,000 is the hardest money you will ever save. After that, the math begins to work for you instead of against you. The turning point happens when your investments start producing more money than your labor. To grow from $100,000 to $1 million, you need to understand the basics: your return rate, contribution rate, and time horizon. A realistic target return for long-term investing is between 7 and 10% annually. At 8%, $100,000 turns into $1 million in 30 years without adding a single extra dollar. But we want to speed that up dramatically. Action steps. Set an automatic investment schedule, even if it's $300 or $500 a month. Choose long-term vehicles such as index funds or diversified ETFs. Focus on lowering fees. Even 1% in fees can cut hundreds of thousands from future returns. Use tax-advantaged accounts whenever possible to increase compounding speed. The most powerful accelerator to reach $1 million faster is increasing your monthly contribution. Your goal is simple: raise your savings rate. Many people underestimate how fast wealth grows with consistent contributions. For example, investing $100,000 plus $800 a month at 8% cuts the timeline to about 16 years. Increase that contribution to $1,200, and the timeline drops to around 12 years. Action steps. Audit your spending and identify recurring costs you can eliminate. Redirect salary increases and bonuses directly into investments instead of lifestyle upgrades. Aim for a 20-30% savings rate during your high-earning years. Use automation so saving becomes default, not a decision. Growing to $1 million requires choosing investments that reliably compound. You don't need risky stock picking or crypto speculation. Instead, rely on proven compounding assets: total market index funds, S&P 500 ETFs, and diversified growth funds. These vehicles historically deliver strong long-term returns with low volatility compared to speculative investments. The wealthiest investors keep most of their money in broad, boring indexes. Action steps. Build a simple portfolio, such as 70% stock index funds, 20% international funds, and 10% bonds. Rebalance annually to maintain your risk level. Avoid chasing hype. If an asset promises guaranteed high returns, walk away. Focus on long-term growth, not short-term excitement. Once you cross $100,000, the next major accelerant is income expansion. The truth is, you cannot invest what you do not earn. Wealth builders aggressively increase their earning power through skills, promotions, side businesses, or consulting. Even an extra $500 a month dramatically compresses your timeline. And once your investments grow, your investment gains start to match and eventually surpass your earned income. Action steps. Identify a skill with high salary leverage: tech, sales, management, analytics. Build a part-time online income stream, even if small at first. Negotiate your salary annually. Most people never ask. Treat every extra dollar as investment fuel, not spending fuel. Your money won't grow if your lifestyle grows faster. Lifestyle inflation destroys more wealth than bad investments. Many people crossing the $100,000 mark begin upgrading cars, apartments, vacations, and gadgets. Those upgrades are the reason most never reach $1 million. The key is holding your lifestyle steady while your income grows. Action steps. Keep housing costs below 30% of net income. Never finance a rapidly depreciating car. Buy a reliable used model instead. Avoid high-interest debt at all costs. It cancels out investment returns. Track your net worth monthly so you see progress and stay motivated. When your portfolio reaches around $250,000 to $300,000, compounding becomes noticeable. At standard market returns, your investments generate $20,000 to $25,000 per year without you lifting a finger. When you grow to $500,000, that passive growth often exceeds $40,000 annually. At this level, your money is working harder than you are. With consistent investing, the jump from $500,000 to $1 million happens much faster than most people expect. Action steps. Stay invested even during downturns. Volatility fuels long-term growth. Avoid stopping contributions out of fear. Downturns are when millionaires are created. Reinvest all dividends to accelerate compounding. Maintain a diversified, low-fee portfolio to protect long-term performance. Reaching $1 million doesn't happen from luck. It happens from discipline. Your $100,000 is the foundation. Your habits do the rest. When you combine consistent contributions, controlled spending, and long-term compounding, the outcome is almost inevitable. Wealth becomes a system, not a hope. And once you reach $1 million, your portfolio can generate $70,000 to $80,000 annually in growth during strong market years. Action steps. Maintain your long-term horizon. Wealth builds over decades, not months. Continue increasing contributions whenever income rises. Keep your investment plan simple and automated. Celebrate hitting milestones, but don't stop. Compounding rewards persistence.